Welcome to Bitcoin and Beyond. Getting some peeps up here. Should have some people filing. I think we distributed pretty well all over to the chat, so we should see some people trickle in. GM McKill, co-founder of pSTAKE, who is a new entrant in the Bitcoin game. Got Tabasco on here as well. We can bring Tabasco if you want to speak. I'm going to send you an invite. I know you guys are doing some stuff in the Bitcoin game, so feel free to hop up. And we'll just kind of cycle this around. If anyone has been here for any of the marathon spaces that we've had where we just kind of cycle through people, I think that's kind of what we'll do today. Keep it pretty chill, laid back, and talk about Bitcoin. Andy, have a day. What a better day for it in recent memory.
Yeah, we just got that first post out as well for the Bitcoin and Beyond space. Maybe you want to pin that up here as well. And yeah, give it a couple minutes and we can just jump in here.
Yeah, good call. I'll pin that now. Glad we got that out there beforehand. There we go. First and foremost, a little shout out to our sponsors, D-Wallet, BitCosm, CoreDAO, Risk Zero. All of those guys are massive help. Very cool to see what they're doing in the space, especially like Risk Zero is not entirely Bitcoin oriented, but they're starting to spread their wings and fly. And McKill, welcome. You guys very similarly have gotten a start outside of Bitcoin and now venturing into the space. Starknet announced that they're going to move to Bitcoin too. And so I think this is a trend that we're going to see some more projects follow suit. Do you want to say a little bit about pSTAKE and why you guys chose to make the move over to Bitcoin?
Hey Rob, thanks. Absolutely. Hey everyone. By the way, if I sound a little sleepy, please excuse me. It's 1:30 for me AM, but I'll try my best to not sound sleepy. So yeah, I think again, maybe just to give a quick brief about pSTAKE. So we've been building in the Cosmos ecosystem since 2019, and started out with liquid staking very early 2020 liquid staking with Atom. We launched the product early 21 before Cosmos had IBC or Osmosis or any DeFi activity within the ecosystem. We tried our best to scale the product. Obviously, we hit a roadblock because Cosmos itself failed to have those users and the traction, and obviously it may sound controversial. We were building in Cosmos for a long while now, and we realized that Cosmos has failed to have that traction and that get those users and get anything to go through for liquid staking. So we kind of looked at other options, and we saw that okay, for the first time now in so many years, you could actually build something for Bitcoin. Because building for Bitcoin was almost impossible for a very long time, right? Obviously, there were teams who were trying to do that in their own ways. But the moment we saw Babylon, and Babylon was trying to do something very different at the beginning, right? They were trying to do Bitcoin time stamping, which was kind of like synchronizing block times across chains to achieve like lower unbonding periods for Cosmos chains. But that was a very different product. But the moment Babylon started looking at Bitcoin staking, we kind of got excited about it, and Bitcoin is literally the biggest asset. So the opportunity to do liquid staking for the biggest asset is super exciting. So we kind of saw that as the next obvious move for pSTAKE. So that's why we're building for Bitcoin.
Yeah, man. I mean, that was kind of like part of our inspiration on wanting to learn about this more. Is like, I just feel like there's so much capital in Bitcoin, and there's so much, I put it as like dormant capital, which I saw that you saw, McKill. And I think that like what we've heard as well from builders is that there's just generally going to be this kind of like leapfrog effect, if you will, where a lot of kind of the mistakes or a lot of what we had to do in the Ethereum space to establish like DeFi and to like build out like the first lending primitives and then like figure out the interoperability. Like it just feels like the Bitcoin space can just like basically leapfrog all of that and just start to build towards the end game, which we're kind of hearing is like some of like these different ZK primitives on Bitcoin. So I think that that the kind of move that you guys are making towards Bitcoin seems to make sense. What kind of still throws me for a whirl though is like this idea of like Bitcoin staking. I'm like, Bitcoin's proof of work, but now there are multiple Bitcoin staking projects. Like how does Bitcoin staking actually work?
Yeah, actually, it's very simple, right? Bitcoin, like you said, is not a proof of stake asset. So when we say Bitcoin staking, it might sound very misleading because the first thing people think about staking is, okay, you can stake your asset to secure your chain and earn some staking rewards. Bitcoin staking is different in the sense that it works like eigenlayer. So it's like restaking, but since Bitcoin does not have any native staking, the first layer of staking is something that we are calling staking. So essentially, you bring your Bitcoin, lock it onto Babylon. That Bitcoin has some economic value. This economic value is represented across certain chains within the Cosmos ecosystem who act like AVSs or actively evaluated services or consumer chains or any chain that consumes security or borrows economic security from this Bitcoin deposited into Babylon, and they pay out a certain portion of their revenue or inflationary rewards to create yield for BTC stakers. So you essentially, as a BTC holder, you deposit it into Babylon, say, okay, I want to secure these 5 chains and I want to earn yields. So far, you could not generate any yield on your Bitcoin, but for the first time, you could actually like generate yield in a very risk averse manner. I would say the reason I say risk averse manner is because you're not being asked to, first of all, Babylon, kudos to them, they've been able to figure out trustless staking. It's not just random, staking through like multi-sigs and PCs. It's actually trustless staking where you have custody of your own assets. And that I think is a game changer because Bitcoin has limited capabilities. To do certain things with Bitcoin is actually very complicated. The fact that somebody is able to do it is very big in itself. So I think what they've established is the ability for users to have custody of their BTC, stake it onto Babylon, earn some yields in different assets, and I think that opens a huge avenue. But it also comes with a problem, right? Which is where we come in, because staking has a problem. It is not capital efficient. It creates issues where you have to lock up your assets and wait for the unbonding period, because if you're securing a Cosmos chains have 21-day unbonding periods. That 21-day unbonding period also applies to your Bitcoins that is staked. The slashing that is applied on the Cosmos chain for its native asset also applies to BTC. So that's where we come in, where we issue the liquid stake token. In the Ethereum world, we call it liquid restake tokens for securing these chains. And then you can use this liquid stake token to do a bunch of exciting things, generate yield, take it to BTC L2's side chains, take it to Ethereum ecosystem, take it to any ecosystem, because honestly, BTC is not like Atom or Sol or any other asset which is going to be restricted to its own ecosystem. It's going to fly everywhere because of the amount of abundance and liquidity that it can create for these chains. So that's kind of what excites us to issue the LST, take it everywhere, let people generate yield on their Bitcoin, and do exciting things with them.
Yeah, it can be a little confusing, but it seems like Babylon is really is really kind of pushing that forward. And I saw your post about kind of economic security being a meme or not. Yeah, we're just kind of putting you on the spot, but maybe you can explain to the audience as well, kind of like the thesis around economic security being worth something versus like cryptographic security, and kind of how you see this like restaking and staking of Bitcoin contributing to some of these networks.
I think it's definitely putting me on the spot, because I do hold a little bit of a controversial view. I even talked about Eigenlayer versus Babylon, and said what my views are when it comes to economic security. I think first and foremost, economic security definitely has value, but to a certain degree only. Because what people tend to forget is, as a proof of stake chain, what matters the most, and why I say the most is because it is what proof of stake was supposed to be. It was not about economic value when proof of stake was created. It was created to have this staking ratio, which is, if it's high enough, which means if enough tokens are staked that you can't acquire more than 33% of the tokens of a network, you cannot attack that network. So what has happened now over time is we've kind of moved away to this point where everybody starts believing that, okay, economic security is a lot more important than staking ratio. But staking ratio is actually what makes the most amount of difference, because if 67% of the total supply of a coin is staked on a network, you can't really acquire more than 33% of the tokens. You need 33% of the tokens to actually halt the chain, not even attack it. To attack it and steal funds, you need a lot more. So economic security is kind of a meme, but at the same time, it bolsters security. It's an additional layer of security in my view. So having high staking ratio is great, but the moment you get even more economic security, all of a sudden to attack the network is like so much more complicated. Also, because in today's world, you don't see those high staking ratios anymore. The staking ratios for most chains remain relatively lower, because chains use those assets for different purposes, to build liquidity, to take them to different places. So it's great to see economic security, and to maybe go into the direction of why I said Babylon is in a much better position than Eigenlayer when it comes to the economic security game, is because you have to think about who's the consumer of economic security. You're building a product, you need to build the product for the right consumers. Those consumers exist in Cosmos, unfortunately, or fortunately, I don't know. But there's so many chains in Cosmos today. Those chains have decent traction, some TVL, some do not have much TVL. But the staking ratio of these chains has started reducing drastically. Now they need additional layer of security, and that's where Babylon comes in with the BTC economic value. So a shared pool of Bitcoin that is used to secure these chains. And because Cosmos chains have intrinsic inflation, now inflation is not good, obviously. It's not never sustainable. It's not going to help anyone down the line. But the fact that it has inflation, and to a certain extent can be justified because you have to pay for security because you're using your own tokens to secure the chain, right? Why are people going to use the tokens to stake them if they don't get anything? So to bootstrap that initial security, Cosmos chains do inflationary tokens. And that's where Babylon benefits because a portion of those inflationary tokens immediately go to BTC stakers. But with AVSs on EigenLayer, the problem is that they're not the right consumers because one, they're going to externalize their entire security to EigenLayer. They don't need to have their own set of validators, anything. They don't need to have emissions, but they will start creating emissions now just to be able to provide some value to EigenLayer, which I think is going to lead to like a whole bunch of other problems. And I think EigenLayer has $20 billion in on the supply side, on the ETH side that has been deposited. How do you generate enough yield that is going to be able to make any difference for these $20 billion worth of ETH? You can't, honestly. But if Babylon can keep the BTC deposited, the supply side limited, and have the demand side hyped up because of just random numbers, throwing in. I know we have other speakers as well, but just to wrap it up, like if you have the Cosmos Hub market cap is 4 bill, let's say FDV is 4 bill, 15% staking rewards, and you say, okay, the Cosmos Hub says, okay, we're going to share 10% of our staking rewards with BTC stakers. That's $60 million a year. If Babylon has $1 billion worth of BTC, just through the Cosmos Hub, it can pay out, 6% yields. That's phenomenal, I think. You cannot have that on EigenLayer, in my view. So that's kind of why I think economic security is a meme, but it should be utilized for like add-on security, should be offered to the right consumers, and it becomes interesting then.
Yeah, that's interesting. That is definitely a contrarian perspective. If you're thinking about it from like an Eigenlayer and Babylon perspective. Passing this back to Rob. Rob, I think we have Chase here from Molecule, and yeah, Rob, curious what some of your thoughts are on the Bitcoin space. Obviously, we've gone through now maybe like 10 presentations, or at least, and have kind of had our eyes opened to that. We can definitely get Chase up here. So yeah, pass it over to you, man.
Yeah, I sent Chase an invite, so hopefully he's able to come up soon. And I think this concept of leapfrogging is definitely key. Like, this is something that we've heard multiple people mention in their presentations. Shout out Karsten from Cartesi, who's also working on BitVM, who kind of first introduced this term. And I have long thought about how Ethereum is like this experimentation ground for Bitcoin. It's almost like obviously they have two very different paths, very different underlying technologies, and there's a lot of nuances in both. But I tend to think that Ethereum is still, in its own right, like totally valid, totally got enough going on in its own right, but a sandbox for Bitcoin. Like, Bitcoin still has 10x the market cap of ETH, and even if you add up like all of the assets that are on Ethereum, I would still say that Bitcoin has more value on its Bitcoin L1, and so for that reason, we tend to see that Ethereum has like a lot of innovation going on. It's much more like a tech oriented play. Like, we've seen time and time again that people refer to Ethereum more so as like M2, Bitcoin more as M1, Bitcoin being like the digital gold, Ethereum being more like the digital Wall Street, or like even now at the chain level, more so in terms of like compute and taking on the technology world. And I think Bitcoin has to somehow become more like technology. Otherwise, it'll get ossified and get thrown into like this pet rock paradigm, which it's been in for a little while now. So all that being said, I think it's really important that Ethereum continues to push on and kind of like shows Bitcoin what is a fair way to develop. Otherwise, we're going to see something else come along and take on Bitcoin, and maybe that's ETH or maybe that's something else. But I tend to think that this concept of leapfrogging is really important because we've seen a lot of things not. Ethereum has proven that a lot of things don't work, and we don't need to repeat those same mistakes in Bitcoin. We can skip ahead to the things that do work and the things that are proven to work on Ethereum. So that's something that has really been forefront on my mind. I think Ethereum still has a long way to go, and so it means that whatever we implement on Bitcoin isn't going to be perfect. But I think it's time that, especially as we onboard like new capital, Bitcoin is hitting all-time highs here, like as we speak. And there's a lot of demand for programmable Bitcoin money Legos. This is something that like people found and loved on Ethereum, and I think it's no surprise that people want the same things on Bitcoin. We've got Chase up here from Molecule, who's bringing the SVM over to Bitcoin settlement, and so I think this is a perfect example of bringing the best types of technology that are outside of the Bitcoin realm, more so in the Ethereum and Solana realm, and now applying those innovative technologies to something that's tried and true like Bitcoin. And so, Chase, why don't you introduce yourself and tell us a little bit about what Molecule is doing on Bitcoin?
GM. Yeah, thanks for having me. So Molecule is a SVM rollup network. We're bringing Solana's C-level virtual machine to Bitcoin. And what that means is you can imagine the scalability and throughput of Solana on Bitcoin as a programmable layer. So super excited to bring the next phase of Bitcoin programmability to fruition. And our vision is really Bitcoin is a 1 trillion digital asset, and it can evolve into a 100 trillion global operating system. And we are super excited for that to happen in the next couple of years.
Chase, do you think that there's as much technical importance to like the trade-offs of these systems as there is in like the Ethereum space, as far as like how these chains and rollups and side chains and things are being built?
Yeah, I think probably the most obvious trade-off that we have seen is speed of deployment. So we have seen side chains that's popping up a lot recently. What that means is chains that either have their own consensus mechanism, or they settle to another layer one like Ethereum, and using existing technology on the EVM side, it's a lot faster to make that happen. And the trade-off there is you don't inherit Bitcoin security. It's actually a very difficult thing to balance, because right now on Bitcoin itself, it's very challenging to settle onto Bitcoin. There's a few really smart teams, a lot of people pushing initiatives forward, such as the BitVM team by Robin Linus. There's also guys pushing for inclusion of new opcodes in Bitcoin itself to enable the verification of ZKPs. We are seeing a lot of development. I think it's really just how much time it takes, how much effort, how much R&D, and then there's the security trade-offs that happen along the way. What is truly a Bitcoin roll-up, or what is not? There's a lot of people debating that now, and there are guys who are defining these things for everyone in the space to help us understand it better, like documenting Bitcoin layers. So I think we need, as a whole ecosystem, we need time to grow together, similar to how the rollup space has grown on the Ethereum side, and then as a whole, we can come to a consensus on like what is the best way to push things forward. But I do think we can take some lessons from Ethereum, see like what has worked so far. For example, the myriad of side chains in 2021 that led to true rollups like Arbitrum and Optimism.
Yeah, I think there's been like a bit of a change in the pace of development since like the ordinals craze. But like the thing that we're starting to understand is like waiting for BitVM to build a rollup doesn't really seem that feasible. It seems like launching sidechains is the more feasible approach to actually get users TVL and to get traction, and then you can kind of like progressively decentralize as those kind of opcodes and things. Those things go. Those processes take time. It's kind of similar to Ethereum scaling, where optimistic rollups don't even have fraud proofs right now, but eventually they will. But you could argue that those are just like almost like centralized side chains in a sense as well. So yeah, it's definitely an interesting space. Yeah, I'm curious, Chase, if you've heard of what McKill and Persistence is doing with pSTAKE, and kind of if you've had any thoughts on like this native Bitcoin staking, or this kind of Bitcoin economic security work.
Yeah, I think staking is really important part of the ecosystem. Miko, would love to hear more from you. I do think it's the most natural progression of Bitcoin, right? How do we get yield? How do we use Bitcoin as the economic security for different applications? But
No, please go ahead if you have more to add. I think from my side, it's very straightforward. It's like it's the largest asset. It's the most stable asset. no other asset makes more sense to be utilized for economic security, because when markets go down, Bitcoin remains the most stable. If you want to secure a chain, there is no better asset than Bitcoin for that. From my side, the natural progression for security of chains, whether economic or not, has to happen through Bitcoin in a way. Anything else is a less superior asset for that.
Yeah, I think so too. Bitcoin is by far the largest digital asset in the space, and it makes a lot of sense that it is used as the economic security layer for different applications. So will be awesome to see how you guys and other teams, tackle like the limitations, right, of Bitcoin itself. Lack of opcodes, the Turing Bitcoin script. We'll love to hear more about your thoughts on that part.
Actually, I am, maybe to take a step back, I would say I personally am not very bullish on Bit. I know you guys are also building a SVM Bitcoin, chain. But personally, I'm not very bullish on BTCL2s in its current state. So, like for me, the capabilities when it comes to building on Bitcoin right now is still very limited. Once Opcats is here, then things change a little bit, and then obviously we are moving in the right direction. But I don't think there's enough on the Bitcoin network today to build with, other than runes and some other stuff, ordinals, and obviously, like, I'm talking purely in terms of like BTCL2s. Rob, you were saying something.
Yeah, I was going to hop in here, and I tend to agree. I think you make a good point about kind of like the limited functionality at the time being. And I think this is why it's like, I do think it makes sense why we're seeing these things now. I think a combination of things. Like, I started out talking about kind of like the leapfrogging principle and how we see Ethereum as this experimentation ground for Bitcoin rollups. And I think what we're seeing right now is like pretty similar in an investment paradigm where the larger institutions and capital players, they want to deposit money into this, but they're not going to do so until the things are proven safe and scalable. And so I think what we're seeing now is like these rollups are starting to accelerate their go to market so that they can go live. And then what we'll see initially is a wave of retail deposits and volume. And I think it's almost like sending these are the guinea pigs, right? And that's not necessarily a bad thing. It's like where there's more potential reward because these projects are so early. But that's not really what the larger capital institutions want. And so I think we're kind of testing out the rollups security and scalability with this like initial wave. And then once, it may mean that some of these Bitcoin L2s go down or not. Some of them get proven out as very secure. And then we'll see some larger inflows of volume. I think that is what we'll see play out in terms of like inflows into these L2s. And then the other thing that I think is important to add here, as far as like why we're seeing the Bitcoin L2s come out now, is that this idea of paying for the miners to continue to mine the chain. I was always of the understanding like, that is a problem for like 100 years from now, when the block reward runs out or it gets really, really small, that's when it's not going to make sense for miners to mine the chain anymore. And so we'll have to figure out a solution, in 50 or 100 years. But every time we get a halvening, like these miners take a big pay cut. And I think it's really more like something that's like 8 years or maybe 12 years away, because even if we just cut the block subsidy in half a few more times, the reward gets quite small for these miners. And so it's increasingly urgent to solve the problem of transaction fees on Bitcoin. So some native projects are doing that with ordinals and BRCs and inscriptions. But I tend to think that these Bitcoin L2s are in the most promising position to solve this transaction fee problem to pay for the Bitcoin security budget. And that's why we're seeing Bitcoin L2s come out now. As far as like what we're going to see and like whether these Bitcoin L2s are bullish or not, it's so early. None of these are really rollups yet. A lot of them are not on mainnet yet. And so this presents a very risky opportunity. It means that there's going to be a lot of potential rewards for these early adopters because they are the guinea pigs for these larger capital players. But in this market, guinea pigs get paid. And so it's just a matter of like, really being careful about the Bitcoin L2s that you're depositing into, making sure that they are safe. Talking to like several of these Bitcoin L2s, we're not confirming or denying that any of these are safe or not, but the purpose of this Bitcoin L2 series is to shed some light on what the design choices are and what architectures are out there to come up with the most promising blockchain and roll-up design. We're not certifying any of these, but I hope that this educational program does shed some light on the different design choices that are being made in the Bitcoin space.
I agree with what you just said, Rob, because I think the moment you take a step back and you look at all these L2s, none of them are rollups, to be honest. These are all side chains, first and foremost. Everybody's relying on MPCs and custodians to work it out. And there's nothing wrong in that. I do think it's better to do that than to try to build a bridge that is not at all reliable or secure. Better to go down the path of using custodians. So there's a lot of trust assumptions here. The most important one being the bridging aspect. The other is the settlement does not happen on the Bitcoin network. I think the miners, the question about how will miners actually end up making money is a very tough one, because I don't think, unless BTC L2 scale to a significantly high portion of the BTC market cap. So, if BTC is $1 trillion and BTC L2s do not have, even a combined 250 bill market cap FDV, it's difficult for the transactional value to actually mean anything to BTC miners, because it's going to be a very small percentage of that 250 bill, right? So in a way, I don't think BTC L2s today can solve problems for miners in today's context, like you said. But 50, 100 years down the line, if BTC L2s actually becomes solid and secure and end up becoming like rollups, I think then it makes sense. Right now, I think there's less than 0.1% of BTC on these side chains, which is literally nothing. I think there's one project that I got excited about, which was, I think, Alpine Labs, which was trying to bring ZK for BTC. I think that was a good one because of their approach. They have a minimal consensus approach as well, which is, I think, different to what others are trying to do. But again, in today's context, there's nothing that but again, I like Merlin chain, for example. Obviously, now where the TVL comes from, all those things are very controversial, and I think it's the entire ecosystem. It's all very controversial where TVL comes from, where people are, where are these users coming from, right? But I think what matters is, if you're building a BTC sidechain L2, you should at least try to build utility for assets that exist on the Bitcoin network, which is ordinals and runes, which nobody's trying to do, which is very surprising. There's very few chains that are actually trying to work around those things and try to build some utility, make some gamification, and get users to do things with runes and ordinals. But in the absence of that, it's all just independent chains doing Bitcoin branding and trying to get access to capital.
I think today was pretty crazy too for Starknet. Starkware announced that they're trying to do a Bitcoin. They're trying to take Starknet to settle on Bitcoin and Ethereum together, which they just put out this post saying Bitcoin's biggest challenge is scalability. Starkware's vision to change that, transform Starknet to be a self-custodial, decentralized L2 with full functionality over Ethereum and Bitcoin, which that was not in my bingo cards for Starknet as a roll-up. I mean, it's kind of wild. They're going to simultaneously settle on Bitcoin and Ethereum after this OpCat upgrade goes through. It basically sounds like, and what Rob and I have heard from a lot of these conversations, is that once this OpCat upgrade happens, and a lot of these, and that's kind of what you were saying, Nikhil, as well, a lot of this really kind of starts to actually happen. You know what I'm saying? So I think that's going to be interesting.
Yeah, I think it makes perfect sense for Starknet to work on something on Bitcoin, because what's happening, what's possible on Bitcoin, a lot of it will be enabled by ZK, and Starknet is at the forefront of it. And I think its founder has been contributing to BitVM and working with quite a few projects in the Bitcoin ecosystem. So I wouldn't say I'm super surprised they made the announcement. At the same time, I think it's an interesting way for them to sort of market themselves as the ZK guys. And on the issue of Upcat, I think it's really good to see more guys pushing this forward. I think it will bring the whole industry forward. It will take some time though for basically the miners and all the Bitcoin full nodes to come to a general or a rough consensus on whether this is the right way to go. And even after OpCat comes through, there's still challenges to be solved. So if you ask, I guess, sort of the Bitcoin L2 guys, is OpCat gonna completely solve the roll-up issues? I think the answer will be yes, somewhat, because the script that's used to solve to verify any ZK proofs using it's still relatively large, even though you have concat, meaning that you basically can combine two elements in the stack in Bitcoin script. It will make life easier, I would say, to verify ZK proofs using Bitcoin script, but it wouldn't be like a perfect solution either. So there's still a long way to go for like the whole Bitcoin ecosystem. But having said that, I think it's really exciting because everyone is moving together, and there's like a whole movement that's actually being created here. So I think we will progress a lot faster than people think.
Yeah, it's interesting to hear you talk about why it really makes sense for Starkware to also settle onto Bitcoin. And they've built Starknet in such a way that it's flexible enough to be on top of Bitcoin and Ethereum. Yeah, I mean, I tend to think like this is something that we're going to see more and more of. It's really cool that it's happening faster nowadays. And so, Chase, you think that OPCat like isn't as important as people are making it out to be, because it seems like BitVM is quite dependent on it, and a lot of these Bitcoin L2s are dependent on a safe and secure two-way bridge. Could you kind of unpack a little bit more about like how you see OPCat fitting into this equation?
Yeah, so I think there's two paths of on the Bitcoin programmability, or the ability to compute any arbitrary computation on Bitcoin. And the first path is BitVM, which essentially people are coming in saying that, hey, we don't want any changes to Bitcoin right now. We think that Bitcoin by itself is perfect. We can use the Bitcoin script, the opcodes that's available right now to do this optimistic prover challenger mechanism that can allow us to indirectly calculate anything on Bitcoin, and that's BitVM. I think what they want to see changes in Bitcoin, what's probably going to benefit them the most is increasing the size of data that can be written onto Bitcoin's shared UTXO. And then there's the other camp that says, hey, it will be even better if we can do more stuff on Bitcoin. If we can, include different opcodes that can enable more expressive computation using Bitcoin script. And there's like a range of how expressive you can go, and opcat is just one of the few, I guess one of the many actually opcodes that's available to enable us to do that. I think there has been many proposals in the past of different opcodes that people suggested. Opcat is one of it was probably the best one that we've seen so far that has minimum impact on Bitcoin's overall security. Because essentially what happened in the past is opcat was included in the Taproot upgrade and was sort of put in the backseat when people realized that you can sort of spam Bitcoin and bring full nodes down. But also, there is a limit to the size of data that's can be written onto Bitcoin that's implemented during Taproot. So that means that opcat is no longer will no longer cause that same congestion issue. So that is why now like people are bringing it back and saying that, hey, we just need like a soft fork. The code is already there. It's already in testnet, and it's fine. It can bring more benefits to the ecosystem than harm. So that's really where we're at right now as a ecosystem.
I'm looking at the Bit 420 proposal, which is OPCat, and so just some notes here that I noticed. First thing is that be implemented by a soft fork, not a hard fork. And so I think that's important because I don't know if you guys read Vitalik's latest post where he talks about some Bitcoin going back to the block wars. But one of the camps was pretty insistent on making changes to Bitcoin's code, like the SegWit upgrade, if you guys remember that one, from 1 megabyte to 2 megabyte block size. And the idea behind that was to make a soft fork. If you guys remember Bitcoin Cash, there was a hard fork that made the Bitcoin Cash. There's one camp, the big blockers, that wanted 8 megabyte blocks. The small blockers didn't want any upgrade, and so they wanted to keep the block size to 1 megabyte. And so there was a hard fork, and Bitcoin Cash went the big blocker route with 8 megabytes, and I think they're actually up to 32 megabytes, but no one cares about Bitcoin Cash. And then so there was later on down the road, there was a compromise soft fork called SegWit that made it 2 megabytes. And then I think actually there was the Taproot upgrade that made it 4 megabytes. And so now we've got like a little bit more data, like space for the scripts in Bitcoin. And so I think it's interesting to see that this OPCat would be implemented as a soft fork, because that was the original airdrop. I remember, having some Bitcoin in a wallet. Bitcoin Cash hard fork happened, and then all of a sudden I had a bunch of Bitcoin Cash and a bunch of Bitcoin, and so that was pretty cool because that was the OG airdrop. Probably won't get one of those, but who knows? But yeah, so this will be a soft fork. I found that kind of interesting, and then the other thing that I found interesting, just in the references of this GitHub pull request for the OPCat BIP 420, there's an article here that says OPCat makes Bitcoin quantum secure. It was published in 2021. I don't want to show this too hard because I haven't had a chance to read it yet, but just find that interesting as well. And just curious for anyone who has looked into OPCat a little bit, if Chase, maybe if you have any thoughts on the quantum security of Bitcoin and if that changes with OPCat.
I think it still goes back to how we can use the new functionality, and I think the most obvious one is still verifying ZK proofs. And right now, it seems like the best way to do it is using Bitcoin script to verify any sort of snarks that's instead of other form of ZK proofs, because that's the most lightweight format we have now. What that means is it can enable unilateral exits of assets on Bitcoin from Bitcoin and another chain, which creates rollups. But it also means that there can be ZK bridging or ZK bridges that's available. I think guys like Polyhedra, they have made a lot of progress there as well, and that's something that's really interesting. And I do think there will be more use cases that will pop up as well. I think in the testnet, for example, people are using OPCat to create like really out of the box, I guess, really unique ways to use that functionality to solve different problems that you probably don't think of, conventionally. So I think we have like a lot of flexibility there. It's really up to the devs to figure out like what's the best way to use these things. And I think in terms of security, it's I would say we're close to consensus, right, on how we see OPCat's inclusion and what's the security assumption there, which is basically it's much more good that can be enabled than any sort of challenges that we can face. But as we know, in a fully fledged ecosystem like Bitcoin, that's super that's hyper scaled, right? Like 1 trillion of economic value there. It takes time to bring any upgrade, and I think we are moving forward as a community. So that's encouraging to see. So I am super excited to see what's going to happen in the next 6 to 12 months. I would imagine probably like something moving forward in the next 6 months or so.
Yeah, and to add to that, I think what got me excited, I read through that as well, Rob, and I think the most important element of this whole point was that in today's context, we have all these different cryptographic signature schemes, which with quantum computers you could actually like exploit them, and they actually threaten the common forms of cryptography. So this OPCATS introduces Lamport signatures, which generally have like large hash functions, and you could actually still be secure even if a quantum computer is kind of like threatening the security of other cryptographic schemes, but not this one. So I think it definitely positions Bitcoin to be in a place where it's much more secure and goes beyond what already exists for other chains today, right?
Definitely. And we can go take a look at L2B and look at like how a lot of these Ethereum rollups are still not quite in their final form. And so it's not just Bitcoin rollups that are going to go through this progression with some of the new tech that's coming out. Ethereum rollups still have a long way to go as well. As we sort of wrap up here, you guys are definitely making waves in the Bitcoin space, which is very, very cool to see. If you guys just have any closing thoughts, feel free to share. Otherwise, thank you so much for coming on, and absolute pleasure, and very stoked to see you guys build a better Bitcoin.
Yeah, just final thoughts. I think the most important thing that Bitcoin needs is to become a more active asset, and with staking, with yields, it's kind of going in that direction. So I'm very excited to build for that more than anything else. I think the technological advances will still take some time, but we start with the basic things that actual users care about, which is a simple product where they can put their BTC, earn some yields, and in a secure manner. And that's what we gun for. That's all I'd say.
Yeah, I'm pretty excited for the rest of this series and just going to keep learning about, what's going on and sharing that information with the space. First videos out there at the top, and yeah, excited to have you guys on another space or panel, Mikhail, and thank you for coming out.
Yeah, thanks for having me.
Cheers, guys. Check out Molecule and pSTAKE, and keep track of all of the Bitcoin and beyond content coming from the Rollup. We'll keep it all in the same thread. And yeah, we will see you next time.